Well, hello everybody, and thank you for joining us today for the MBO Partners webinar series. Today the topic is the Affordable Care Act, and specifically what it is that independent consultants need to know. We are looking forward to a pretty interesting discussion, and please look forward to also having questions submitted. Let me just walk through a couple of housekeeping items. First of all, I'm Gene Zaino, and President of MBO Partners, and with me today is Dave Putt, our Vice President of Consultant and Client Services, who will be talking about the Affordable Care Act as it pertains to independent consultants. For those of you that are not familiar with MBO Partners, just a quick little overview. MBO Partners is a complete business operating system solution. It's basically your online business in the cloud with a complete corporate infrastructure, providing you credentials to work with just about any company, Fortune 500, Fortune 100 company, in terms of the credibility you get and the compliance and infrastructure you have that sometimes is difficult to work with large organizations. You get access to a support center and an individual business manager that really helps you navigate the world of independent consulting. With that comes liability coverage and also executive style benefits, including health plans, by the way, that we're going to talk a little bit about today, and also a lot of different resources and community involvement. So to learn more, just go to mbopartners.com and you'll learn more about what it is that we do. But I want to quickly get to the program for today. And on your screen, just to go through a little administrative housekeeping, you'll see some controls up on the right corner. And make sure you have selected the full screen icon, that little screen there, so that you could get the full view of the screen if you haven't already. But more importantly, there's a chat box that allows you to send questions to us, and we really encourage questions. And throughout the presentation, we'll be looking at these questions and occasionally taking a break and answer them. So please feel free to ask your questions. You will get a copy of these slides at the end of the program, and we are going to be doing live tweeting as well. Our hashtag is #MBOWeb, so please, you could have a conversation among yourselves and with us, and we have people standing by to also answer your questions on Twitter. So the agenda for today is to go over the Affordable Care Act, and obviously we're not going to go into the entire act, which is thousands and thousands of pages, but we're going to give an overview of our high-level view of it, give you the coverage options, and specifically tune into what it means for independent workers and independent consultants, independent contractors, and freelancers. We're going to talk about the tax and the financial impacts of this, and then we're going to talk about MBO's approach to healthcare for independent consultants, and we're going to conclude with some predictions and make some bold risk statements. So before we get into this, I just want to kind of set a perspective here. And doing this webinar today, we did realize that speaking about this topic is certainly quite controversial, probably the most controversial topic across our nation today. And that's because the law is still under a lot of stress. It's subject to a lot of assumptions and interpretations, and this is not to tell you whether it's good or bad. This is to give you the best insights that we have in terms of what our points of view are, and certainly our points of view are also subject to interpretations and assumptions, and there's a lot of nuances, and I personally feel that it's going to take many years before all these nuances are truly figured out with the law. But anyway, we decided that we're going to take the challenge anyway and provide some what we think is pretty quality information. And specifically, we've been studying this Affordable Care Act as it relates to independent consultants, and otherwise known as Obamacare. And we feel pretty compelled that we need to share our thoughts with you because we live the world of independent workers, and it's our role to equip and help independent consultants to get the knowledge and the tools and the services, that kind of help them thrive in what, we see as a increasingly complex environment, but certainly a world where opportunities for independent workers has never been greater. So what we're going to talk about today is based on our knowledge, our interpretation, and our current status, our understanding of the status of the law. And Dave Putt, who has really dug into all of this information and has really been counseled by a lot of advisors, has got great information to share with you. And I'm going to hand it over to Dave and let Dave go through most of these comments. I'll be interrupting if I see things that we need to talk more about, and certainly I'm going to be monitoring the questions of the audience. So, so Dave, welcome, and I'm going to hand it over to you.
Great, thanks, Gene. Yeah, as Gene mentioned, I've been with MBO for about 15 years, and I've kind of had to be in the guts of dealing with independents and their issues for the entire time. And also dealing with the clients that they work with as well in the contracting side. So kind of had to deal with this on a 360 level. So we're going to start out with just sort of an overview of the Act, just in case there's anybody on the call who hasn't heard of the Act or the specifics, just kind of get you up to speed very quickly. So obviously the goal is to increase the number of Americans that have at least a minimum level of health insurance coverage. And what you'll see is there's many people who've had insurance, but the government has now set standards for what minimum levels of insurance are. So there's less latitude for insurance companies to set their own rules, as it were, for the plans. There's specific guidelines that they have to undertake, and you'll see that in how the plans are set up. The individual mandate, which is effective the 1st of next year, is that each individual will need to have insurance or face a penalty, which some call it a tax. But in any event, everybody has to be on some sort of insurance plan starting at the beginning of the year. The employer mandate, which I think most of you on the call probably are familiar, was kicked back a year till, as far as enforcement is concerned, until 2015, which any employer over 50 employees has to provide insurance to their employees starting next year who are full-time. There's a definition out there of what a full-time employee is. That's been changing from our our attorneys have been telling us that's been changing, so that's why in part the definition or the rule was kicked back a year, just to clear up some of those nuances around what is in fact a full-time employee, among other complications of the employer mandate. And also then the establishment of a marketplace. So we've all heard about the marketplace ever since the speech by Obama a number of months ago. To create and find and choose insurance coverage, it's created to help people find insurance coverage through marketplaces where they might not have been available to them before. Has a big impact on independent consultants, private health insurance and medical HRAs. So those of you who are on this call may have already been affected, but we've noticed that private health insurance is an area of great flux right now, and we'll give you a couple of insights that we're seeing relative to the private health market.
Yeah, and Dave, let me just interject just one thing to clear up. On the employer mandate, it's not just to provide health insurance, it's to provide a minimum level of insurance. And one of the key aspects of the new law is that insurance products offered by the insurance companies are now illegal if they are offering insurance products below a government set minimum set of coverage, and that's the concept. So many certainly individual plans and many employer-sponsored plans of the past did not have all of these minimum levels of coverage.
Thank you, Gene. Yeah, we'll touch on that a little bit later too when we get into the gradations of the plans. Now, obviously, what we're targeting here is what are the options for you if you're an independent consultant. What are the options that you have to get insurance? There's really 4 main ones to avoid an IRS penalty. One is to go out to the marketplace and get them. As you know, the marketplace is state defined, so some states rely on a federal marketplace, or the states have set up their own marketplaces. But you are available, obviously, to go to those marketplaces, and hopefully the state that you're working in will be free of the technology glitches that some of the federal website is having, or an employer-sponsored plan. And, some folks still have access to employer-sponsored plans from prior employers through a company like MBO, through a spouse, through a parent. So there are some ways of accessing employer-sponsored plans. And we'll tell you a little bit how we approach health insurance in a few minutes. A government-sponsored plan such as Medicaid, if you're eligible for it, or individual and family health care plans. Now, the key here is that the marketplace did not replace or do away with individual or family health plans. However, it certainly compromised them at minimum. It in many cases has done away with them in certain states. So while today you may have access to a health plan, there's no guarantee that that's going to be there in the future. And we'll touch on that a little deeper in a second. The marketplace, and this is really based on intentions, so this is not potentially the actuality today, but the marketplace is intended to be a competitive online insurance shop where you're able to go get government-regulated and standardized healthcare plans through a marketplace. And again, there's a federal marketplace and states have various marketplaces. Various health insurance companies will participate in marketplaces depending on the location. Not all insurance companies participate in all states. So if you're in one in Chicago, you may have different access than you'll have in California than folks in Pennsylvania. It's also designed and intended to help individuals and businesses compare and choose insurance options. One thing we didn't mention is there are available options under the marketplace for businesses called SHOP. This program or this webinar today, we're not talking about SHOP because this is really designed for individuals who do not have access to the SHOP program. However, if there are small businesses on the phone that do have employees, you can go investigate SHOP programs by going through healthcare.gov. But today we're not going to talk about the SHOP program. Again, states can elect to have their own marketplaces. The real key thing that critical mass, is trying to get the broadest participation in health insurance. A lot of the news that I hear and everybody hears is that the participation is fairly low at this point, a lot lower than they were expecting. And so the only way that the marketplaces are going to survive is to have broad participation where the healthcare costs are spread out across a large group of people, some of which will have healthcare issues and some of which will not.
Yeah, and the rule of insurance is to have a large pool of individuals that reflect the general population, and that's the goal. The intention of the goal is that everybody would participate to a kind of an equal level. If it turns out that the younger, healthier individuals do not participate, my opinion is I think there could be a very adverse selection that happens with this marketplace, which would drive up the cost significantly.
And again, this guy kind of dives into it, and many of you may have already seen this, the different types of plans that are available on the marketplace today. And they're separated into 5 different categories. Just in terms of general insurance, they start with a bronze plan, which is a high deductible with co-insurance and a high out-of-pocket, or the standard out-of-pocket maximum. So this is really a high deductible program where you're paying out-of-pocket, but your premiums are much lower. And then they grade up from there into silver, which has a lesser deductible, gold, which has a 0 deductible, and a lower co-insurance, and then finally platinum, that has the least amount of co-insurance and 0 deductible. For, again, those of us who are familiar with this, just to be very clear, deductible is the amount you pay out of pocket before insurance claims started or even begun to be paid by an insurance carrier. And co-insurance is the amount that you pay versus the amount the insurance company pays. So when you go to the site, you may see a term called actuarial value. And essentially, that's a catchword that says how much of the claim is being paid by the insurance company and how much is being paid by me. So the actuarial value goes up from bronze to platinum from a roughly 60 to 90% threshold. What that basically means is the average citizen in one plan versus the other, the insurance company is paying more in a platinum plan than they are in a bronze plan. Now, obviously, the premium is different. The premium will be lower in a bronze plan and higher in a platinum plan. So when you go and research these plans, you'll see that they fall into these categories. Finally, I doubt that anybody on this call would be eligible, but there is a catastrophic plan up to the age of 30. For folks that have some degree of, there also is a hardship component to it. And even if you're over 30, depending upon the hardship, you may have access to a catastrophic plan, which has the deductible is essentially is your out-of-pocket maximum. You're essentially paying out of pocket for every healthcare visit unless you have something catastrophic that happens. But there's some significant restrictions, and again, the catastrophic plans are listed on the marketplace if you go to healthcare.gov. So many times we get questions about the tax impacts, and we're going to go right sort of to the bottom line on some of these. There are the premiums that you pay through the marketplace are pre-tax. This is one key difference that many of us who have employer-sponsored plans have always paid post-tax, or are paid for pre-tax on the through the healthcare plan. There's also tax credits available to those who have household incomes between 1% and 400% of the poverty line. Those tax credits, however, if you go and actually look at the tables and how they apply to you and your situation with a family, generally are going to be immaterial if your income is past 28%.
You know, Dave, I think there's an error on the slide. The marketplace
Post-tax
is after tax, so I'm not sure exactly what the pre-tax there means, but the premiums that you buy on the marketplace are after your income tax. It's coming out of your net pay. It's an individual that has to pay with the cash you get after you've paid your taxes. So I think that premiums through the marketplace should be post-tax, and then if you're below a certain income level, between the 100 and 400, or up to 400% of the poverty level, you could actually get a government subsidy, which would further reduce the premium. However, statistically, there's studies done that if your household income is under $28,000, the amount of the subsidy will impact your decision. If your household income is over $28,000, then the subsidy, even though it may still be a subsidy, is not significant enough to make a decision, and that's kind of a new poll that came out recently. So I thought that was kind of interesting. But I just want to make it clear on this slide that should be after-tax dollars.
Yeah, and when we get the slides prepared for later distribution, we'll make sure that correction is there.
Yeah.
Yep, most of us pay pre-tax who are on employer-sponsored plans, post-tax through the marketplace. Finally, private individual plans, if you own them, you can still deduct those premiums, but they're going to be subject to the 7.5% AGI limit. Anybody that's had to submit just medical expenses without having access to an HSA or an HRA plan are usually subject to the 7.5% AGI limit.
And the AGI is adjusted gross income for those individuals that have filed a Schedule C or LLC, and you were able to find individual insurance. It had to be in excess of your 7.5% of your adjusted gross income on your tax return.
Yeah, premiums and out-of-pocket medical.
Right, right.
So here are some of the unintended consequences, nuances affecting independent contractors. What we've seen is a decline in the private insurance market. And that depends on the states. And the way that it practically has worked is that certain insurance companies who play in state marketplaces will either discontinue policies altogether or make them match what's on one of the bronze, silver, gold, or platinum plans on those state marketplaces. So depending on what state you're in and who your carrier is, you may actually see a complete decline of the private insurance market within those states. Also, there's cancellation of qualifying plans. A few weeks ago, as you remember, well, if you go back to the original speech with ACA, you were told that you could keep your health care plan. Well, we've all found out later on that that wasn't true, that you couldn't keep your health care plan. People were getting cancellation notices. even though now what's happened is they say, we're going to kick that out a year. We're going to not cancel your plan. Your insurance company can still provide you your old insurance plan, even though it didn't match with the minimum qualifications. We're going to delay that decision for a year. Now, even despite that extended deadline, insurance companies may still cancel your plan. They may still say, listen, we can no longer deliver those plans because we spent the last year discontinuing those plans and not being able to support them through our technology, through our infrastructure, and through our underwriting. So they can't even underwrite those plans because they're not even within their actuarial statistics anymore. So we're seeing people, even though that can has been kicked down the road a year, their policies are still going to be canceled by the insurance companies simply because they can't support them anymore. And we have insurance companies that are MBO clients today that we talk to every day, and we hear that from inside is, this is really complicated stuff, and we can't continue to make changes daily with each nuance of the way the regs are coming. So they're really trying to hone down the amount of policies that they're delivering. Another unintended consequence that people are learning about is spousal penalties and carve-outs, one of which is denial of access. If you are on an employer plan, the employer may say, I'm not going to let your spouse into the plan if she has access or he has access to another plan through another employer. So we've already seen those cut and dry decisions within individuals who are on employer plans. So if your spouse is on an employer plan and you historically had access to it, that does not mean you're going to have access to it in the future. There's also a higher spousal premiums that we're seeing where a spouse may still have access to the plan, but they're going to have no participation in the premium, or they may even have a penalty that drives up the cost of participating in a spousal plan. So, if you're currently on a spousal plan, don't get comfortable. That thing may change in coming years. And finally, the tax deductibility of premiums. Is if you buy insurance on the marketplace, those, again, are being paid with post-tax dollars. And then if you buy insurance privately or you're buying it through an employer, it's pre-tax. So you have to be able to compare those two numbers. And they're not going to be the same because obviously one is pre-tax, one is post-tax. So make sure that you try and do the math on which plan is going to be best for you from a total cost standpoint. Gene?
So let me see if I could interject. We have some good questions that have queued up. But on this tax deductibility part, actually some of our audience has really been really helpful in sending some points out, which I'm going to point to in a minute. But the tax deductibility, again, if it's on the marketplace, it's after-tax dollars. If you could buy private insurance, it's either on your personal tax return subject to the adjusted gross income limit, which I was just told by one of our listeners that they believe it went from 7.5% of your AGI up to 10%. So we just need to validate if that's correct or not. I was not aware of that.
Yeah, Gene, just to interrupt,
okay.
and I read on this over the last couple of days, I don't think the 10% applies to everybody, but it does apply to substantial.
I see. Okay, so again, this is a moving target, and we're giving you, the best we have here in terms of our knowledge. Okay, we had a technical problem? Okay, audio was off. The next point I want to answer is a question from one of our listeners, is that the question is, which state is the exchange that you're supposed to go visit? Is it the state that if you're with an employer, is it the state you live, or is it the state the employer is? And specifically with MBO, is it the state the MBO is in or where the associate lives? It is where you live, which is where you go. So that's answers that question. We have another bunch of questions here. Let's see. So someone is confused. They said they were told that they could no longer expense private insurance premiums. That is true.
Yeah.
The health reimbursement rules have been changed, that private insurance is no longer expensible again unless you go above that limit. Actually, even if you could buy private, you could, I believe, expense it through the
plan.
through the plan, and it depends if you have a qualified plan or not. So it gets a little dicey there, but in general, the spirit of the law was to remove the deductibility of individual premiums, because you're going to go to the public exchanges, which are after-tax dollars, and then you get subsidy if you're below a certain income level. But again, all these things you need to check, personally within your state with your tax advisor.
Yeah, this is an issue for me that I've talked to 3 different people and
Right.
got 3 different answers on. So, and there's been a couple of changes in the deductibility of premiums. So I'd say stay tuned on that, because even with the changes over the next year, that may change as well.
And another question we have here is, will the HSA go away? And no, the answer is a health savings account will not go away. It's for a high deductible plan, and mostly an employer sponsored plans that are high deductible give the ability to have an HSA, but you could not have an HSA and an HRA. And Dave is going to talk about MBO's approach, where we have a high deductible plan that has an HRA but not an HSA.
Yeah, thanks, Gene. And one thing on HSAs, there have been plan changes. So if you've had an HSA in the past, I suggest you go out and read about them, because the regulations around HSAs have changed. There are some more flexibilities with them, but there's also less things you can deduct under an HSA. So you'd be wise. We're not going to spend the time here doing it, but there are different different laws around HSAs today. All right, so we're going to give you a little bit of our approach to healthcare and how MBOs kind of tackled this issue, especially as we're going forward. MBO has historically and currently still does provide a group plan. It would be comparable to a bronze plan, which has a fairly high deductible amount, but also lower premiums compared to that. We do this research, as you see in the last bullet, every year. We competitively bid our insurance program. We're very aggressive about it.
Yeah, and I want to point out, because there was a question about that, Dave, and there are people that are comparing the marketplace premiums to private group premiums and also premiums through MBO, and it's really important to understand the pre-tax versus the post-tax implication of that. If there was, for instance, a $100 premium and you're in a 40% tax bracket, the marketplace premium would have to be $60 compared to the $100 of the private premium to be equal. That's one point. The second point is that the early years of the marketplace, which exists now, are being heavily subsidized. Actually, for the next, I believe, 3 years, the insurance companies are pretty much guaranteed to not lose money because there's a ramp-up period, and the federal government is subsidizing the insurance carriers to offer competitive insurance. So again, there's some non-equivalent market dynamics going on, because there's some startup costs involved and also subsidies involved, even for the point of pricing. So you need to be careful that you don't get brought into a marketplace premium that then in 2 or 3 years is dramatically greater.
Correct. So just a little bit more again on MBO's approach. Ours is a group plan equivalent to a bronze plan. The premiums are paid pre-tax. We don't have spousal penalties, so if you did join our plan, spouses can join that without penalties. We also couple it with an HRA program. For those who have been involved with MBO, we've had a similar program for many years, but allows individuals in our program to write off up to $10,000, which will cover the majority of the expenses that come through on deductibles and premiums, etc. And then, as I mentioned, annually we go out and review our plan to find the best cost and best rate providers. So while it's not our goal to change providers every year, we do try to go to the major carriers each year and make sure that we're getting the best value for the associates that join us. And as Gene mentioned earlier, MBO's program is really about servicing the breadth and width of administrative tasks that independent contractors and consultants have to do. So you can't simply join MBO to get access to health care. We have a breadth of services that we offer as part of working with MBO, and one component of it is the health insurance program.
So there's a lot of questions, and I'm sorry, I don't think we're going to be able to get to all of them, but I'm trying to pick through them here. So one person mentioned, won't a marketplace premium be expensable on Schedule C? The answer is no. It's after-tax dollars, so it can't be expensed on your Schedule C. If you have a business set up and you go through the appropriate channels, there are ways that if you have a company, you could set up a plan that can be company business expense. And again, it would have to be private insurance, not marketplace insurance. And again, the dilemma for an individual that's a sole proprietor, a one-person business, is that it's going to be increasingly more difficult to get individual private insurance because insurance companies are being forced to provide a minimum level of benefits, which in the past they were able to offer, a young, healthy individual kind of a low-cost plan. They can't do that anymore. By screening out certain benefits that an individual perhaps doesn't want to pay for insurance. Now everybody has to have a minimum level of insurance, which makes it cost prohibitive for an insurance company to offer that on an individual basis. By the time you work on selling it to an individual and the premiums are high, it's just going to drive individuals to the marketplace, which is part of the intention. But again, that is after-tax dollars, so that's a confusing element that I want to keep emphasizing. Another question here is it common for private insurance to drop prescription coverage? If so, is this the precursor to the insurer to drop the entire future in the plan? Yeah, it is common for private insurance to drop prescription coverage because that's part of the plan, and again, it's also part of the minimum level of coverage, so that's all kind of wrapped up together. And what does HRA stand for? Dave is going to talk about that.
Sure, yeah, let me cover that because it's mentioned up here on the screen. I wanted to dive into that a little bit. There's two different types of plans, HRAs, HSA. Those of us who are familiar with HSA is a health savings account, which you are essentially taking your dollars and you're putting them into an account which is intended to be paid for health care costs in the future. And those are pre-tax dollars that are put into that account. There are some benefits to an HSA, a health savings account, which you can carry them over from year to year. However, there are penalties for taking money out, and in the future, HSA's penalties are going to be higher. I believe they went from 10 to 20% for taking money out that's not used for health care.
Yeah, and an HRA must be coupled with a group health plan.
That's correct.
So it is not.
An HRA is a health reimbursement account, which is set up by an employer to help defray the cost of them. So it's not a savings account. You're not putting your dollars in, they're employer dollars that are going into it. And if you're interested in it, one of our associates, when you call up and talk to MBO, they can explain how our HRA is positioned. But an HRA does have to be coupled with a qualifying plan in order to do that. The downside of an HRA is you don't carry those monies over from year to year because essentially they're not your dollars, they're your employer's dollars. However, they're all pre-tax dollars the day you put them in or the day you take the reimbursement. So there's no, with an HSA, you have to wait till the end of the year to get the reimbursement back. So there's advantages and disadvantages to setting them up. So if you were looking to set up your own HRA, you do have to have your own health insurance plan to couple the HRA with. All right, in the interest of time, I want to move on to cover the rest of the topics. Again, last point being, we do annually review all of our insurance to make sure we get the best rates from our carriers. As Gene mentioned, there's a breadth of services that MBO offers. We also have retirement programs and planning for our associates. business administration, which essentially all of the invoicing, collections, contracting, everything that you essentially have to do with your clients are handled either through our online business center or through our business managers that work with you individually. All the tax withholdings and filings with states, federal, are handled through MBO when we do your invoicing collections, and also providing business insurance. So those of you who run your own business have to buy business insurance at some cost. It's included in MBO services as part of our base fee. So those are, again, just some of the high-level benefits along with health insurance that go into the MBO offering. All right, we want to make sure.
So you want to just do a couple of questions before we get into
before
predictions? And I know we're kind of running close to the time here, but a couple of good questions. What someone is asking is, how do you know if the marketplace premiums will increase? I don't know, Dave, if you have an answer to that.
Well, if you have an answer to that, I think you could make a lot of money. Well, the key thing Gene mentioned is in the early stages of the marketplace, insurance companies are being subsidized by the federal government. It's not a very well publicized nuance to the program, but the federal government is in fact subsidizing insurance companies as part of the startup cost for doing that. So that kind of creates some artificial rates in terms of the marketplace and what they're offering today. There's also currently, more than likely, there's reverse selection in the marketplace where folks who need the health insurance the worst, probably because they need it for health reasons today, are getting into the marketplace first. So there's some reverse selection going on. So the real key is the greater the participation, the more likely it is that the rates will stabilize over time. If the participation doesn't materialize, then rates could go up and the marketplace could become rather fragile. And actually that kind of plays into some of the predictions. We're going to go into a couple of the predictions quickly here, and that's a really good question that feeds into it. The private plans will likely go away if the marketplace succeeds. So if the marketplace continues to grow and people migrate away from private plans, we've already seen that in some states, as I mentioned, but more than likely private plans altogether will go away if the marketplace succeeds. Large employer plans will continue to be more attractive and more stable. See, some of the issues that we all see with you've heard about the website, that's only one piece of it. We're also worried, what we're being told is the payments that are being made by insurance companies to providers is relying on new technology and new processes as well. So your physicians and your hospitals that are being paid by these plans could also see instability. So what we're being told is the large employer plans that have been in place for years were probably going to be more stable than the plans that are being issued today. So there'll continue to be some instability, and not just in the website signing up in terms of the way the plans are administered and the payments that are going out to providers. The court cases that we hear about are going to continue for more than likely many years relating to the way the plans are established, the minimums, the taxability, things like that. There'll be continued pressure on court cases for many years. Independent consultants are going to be forced into the marketplace or need to get in large employer plans. They're not going to have access to private plans. The exchanges will continue to struggle both in terms of technology and in enrollment, probably well into 2015. So what we're being told by the experts sort of behind MBO, and specifically some attorneys that advise us on these matters, is that the participation will probably continue to be slow for the foreseeable future. Finally, the last two, the government subsidies that we see with insurance, the insurers, is going to go away at some point. And either the premiums are going to continue to rise or income taxes are going to rise to help fund the program. So something's going to have to give. Either the marketplace has to stabilize on its own, or premiums are going to rise or income taxes are going to rise. Something's going to have to pay for the program because providers still have to be paid for their services.
So Dave, there's some more questions here. One issue is that will MBO get their insurance from the marketplace? You mean you could answer that?
Yeah, we get our insurance plan through a direct employer plan today. We plan to maintain that. We don't expect to go to the marketplace.
Yeah, and actually, again, the marketplace is for primarily for individuals, and therefore MBO does have a employer-sponsored plan. Another question here is, I am a veteran using VA health benefits, and the VA announced that veterans using VA health benefits don't need to apply for Obamacare. If that's true, that's great.
Yep. And that was mentioned on one of the earlier slides, is if you have access to prior government programs, Medicare, VA benefits, Medicaid, any of those, you don't have to participate.
Okay. Someone else asking, if I have a corp, am I eligible to join MBO?
Yes, but you're going to need to talk about some of the options with an enrollment specialist. It depends on how your corporation is structured and also what you intend to do with it. Finally, if you have employees within your corporation, how you would manage them through MBO is a little different than you currently do it. So the best advice is talk to our consultant services team, who could kind of advise you on how you work today versus how you may be able to leverage MBO in the future.
Someone else is mentioning to check out Section 105 to see for better tax deductibility. Again, check with your tax accountant before you make any type of tax decisions. Again, Section 105 someone is recommending. Next is, let's see, another question here is there are restrictions for the premium increases over the next couple of years. Yeah, so for the next few years, there are restrictions on premium increases. And again, the federal government, through taxpayer dollars, is subsidizing the insurance companies to make sure they don't lose money. The question is going to happen. The question is, what happens after those first few years? And if there's not enough population into the marketplaces and enough population that is reflective of the general population statistically, where you don't just have people that are in desperate need of insurance, where the healthy people are staying out, that will totally distort and compromise the pricing. So that's an unknown. Certainly the stability of employer plans, I think, are the most predictable because there is a defined population of that employer. So there's some history there. The marketplaces, although it's if there are millions of people that sign up and it is reflective of the general population, obviously that could be a good benefit.
Gene, before you get to the next one, there's one quick mention too. Is prior to Obamacare, there was the insurance companies had a great deal of latitude in how they banded and provided the premium costs to individuals and businesses, where they had a great deal more latitude on geographic banding, age banding, and things like that, where under these regulations, there's some very narrow rules in terms of how they're able to band, both in terms of demographic or geography, age, and smoking, or really the only three bands, and some very limited selection within those bands. So the bottom line there is the premiums can't vary a whole lot based on who you are and where you come from. There's very strict limitations, even for employer-sponsored plans under the ACA.
Dave, there's a question here. As a one-man consultant, can I use MBO's insurance option if no other services are needed through MBO?
No, absolutely not. That's actually that would be called a reverse selection within our program. Our insurance company would disallow it, because essentially you have to be participating in the entirety of our services in order to gain access to the health insurance plan. So a good question.
Lots of questions on taxes here. So another one is, maybe I missed something, but are the premiums on the marketplace not tax deductible? Allowing it would make it more attractive, correct? They are not tax deductible. And again, this is an important point. Premiums on the marketplace, do not expect to take it as a tax deduction. They're after tax only. I think we're kind of running up to the hour here, and we try to keep these to 45 minutes. I still see a lot of people on the line, so we'll keep going. There's a few more questions. Is the deadline for signing up the end of the day, December 13th? I don't know the answer to that.
Yeah, I actually don't know the deadline, but it's approaching quickly to get signed up for the end of the year.
Yeah. Yes. Let's see what else we got here. Will a recording be on the webinar available? Yes, we're going to send out these webinars. Only if you need the coverage January 1. Someone just answered that December 13th is the deadline. Only if you need the coverage by January 1. December 23rd. December 23rd. Okay. Got some lots of questions coming in here. Lots of people giving their input. What's great about this is that we're having this is crowd knowledge from the Affordable Care Act here with a great group of independent consultants on the line. I'm going to say that we wrap it up at this point. So Dave and Laurel, if you have any comments, and then certainly you could put some contact information up on the screen. We will send out the slides. We'll correct that one slide. Again, to learn more or hear more about these webinar series, the information on the screen here, just email info@MBOpartners.com, and we'll be glad to set you up. And I'll let Dave close it out.
Sure, Greg, and if you have any questions, you can also send them through to there. We'll go research them. There have been a couple of questions on here, frankly, that I have some questions about, so I'll go back to our healthcare providers and make sure I get the straight scoop on a couple of items. And finally, if you want more information on MBO, reach out to one of my team, and they'll be able to help see if MBO might be a fit for you. Thanks, everybody, for jumping on the call, and we look forward to catching you on the next.
Yeah, and the questions are still coming in. So what we'll try to do is get you answers back to these questions individually, so they keep filling up. But thanks so much for the participation, and everybody have a wonderful holiday and a very prosperous new year.
Bye, everybody.